What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Amazon.com with the ticker symbol AMZN. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So this is going to be a market structure update for Amazon, and you can see that last week was the earnings report. After the earnings report, there was a huge gap up. Price hit the top side of the channel, and that's when I did my analysis last week, Saturday. So basically, I was going off of the candle close on Friday. So this is all I was looking at when the chart was complete on Saturday. And you can see that I was expecting price to continue to drop down lower to fill in the gap and reach the opposite side of the channel. And you can see that price started to do that. Not by much, but it has started to decline in price. So basically, why was I expecting to hit the top side? Why was I expecting price to go to the opposite side of the channel? That's usually channel rules. If we hit the top side, price will attempt to go to the opposite side in the form of two legs. So just like we hit the top side right here, price tried one attempt to reach the opposite side, price pulled back, second attempt, it hit the side, and that's when we saw the rally higher. So same thing, okay, right, can occur over here too. One leg down, pull back, second leg down. So something like that. So it still looks bearish for Amazon because we're still working lower towards filling in the gap at the 133 level, and then the opposite side of the channel at the low 130s also. So we could probably draw a channel now in the price because there's more price bars on the chart. So it looks like price is in this downward green channel. It's just a micro green downward channel, but either way, it still shows that price is declining. And just because we hit the top side doesn't mean we always go to the bottom, because you can see right back here in the past several times price hit the top side, but the uptrend was so strong that it did not allow price to go to the opposite side. So that can also occur. Does it look like that is the situation here? Not really. It looks like we're already seeing a nice pullback towards the EMA also because we were overextended. So we're far away from the EMA. We can fill in the gap and we can reach the upside of the channel. So right now, short term, is more likely we see price drop lower. Now, is that a trade? Me personally, that would be a counter trend trade. Since price is still within the yellow channel, you're going to be taking a counter trend trade if someone was going short. So for example, let's say someone took a short back over here, at this big red bar, and they put the stop loss above the swing high, and they were targeting the opposite side of the channel. Well, you can see they would have got stopped out because price just traded sideways and eventually went up higher. Let's just say you went short over here. So if you went short over here, you put your stop loss above the high point and you're targeting the gap fill. So let's say you entered right about there. You're going for a 1-to-1. You need a little bit more than the gap fill, but that'll probably get filled. So this one, it's just pretty risky because sometimes the uptrend will override this downtrend that price is currently inside of. So that can occur. That's why, it's better just to wait for a nice opportunity to enter long, somewhere over here instead of, the short, which is counter trend as of right now. Counter macro bias, because macro uptrend is, bigger picture stuff, and this is just a small little downtrend. But even though I still see lower prices, that doesn't mean, it's a good short, because obviously it's low probability. It's better just to wait for a long opportunity, somewhere over here. Maybe not even at the support side of the channel. It just depends on how this downtrend is. But either way, it looks like price is still going to go. I still personally believe that the price will continue to drop because of the reasons I outlined before. Top side of the channel, price will usually reach the opposite side. Gap fill, far away from the EMA. So multiple things. And also if you zoom out a little bit further, we're at a key level at the 138, which is prior support that has turned into resistance for Amazon. So it's more likely we go lower. But like I said before, the uptrend could override the downtrend anytime now. We can just stop right now and reverse. It's sometimes that can occur too. So I'm looking for more downside, but again, the uptrend could override the downtrend and not see the target being reached. So that's all I have for Amazon on the daily chart. Here's the weekly chart. Weekly chart shows that we had a massive run up through this trend line that was broken, and you can see that price still has been far away from the EMA for a while now. We just saw a big green bar a few weeks ago right into the resistance. So that could be a sign of exhaustion from the bulls. And we're seeing some follow through from the bears last week. Last week, this week, well, the closest one. So still more downside, it looks like, for Amazon. Basically the same thing as a daily chart, except just summarized viewpoint. And you can see we're still far away from the EMA. So basically looking for more downside for Amazon, but like I said before, the macro uptrend could override the downtrend, but I'm still looking for more downside regardless. As long as we're still within the green channel, there's a good chance we go lower. Even if we see a break of it, there's a good chance we still see another attempt to the opposite side of the channel, because usually the market generally moves in twos. So that's all I have for Amazon on the daily and weekly charts. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.